everybody. It's Jessica Stone at Stansberry Research, and I'm here along with Ben Morris, the editor of Daily Wealth Trader. And, Ben, you're getting a lot of questions about how to hedge best in this volatile market. One of the things you've noticed is that a lot of people are getting into government bonds, but I'm curious why that's happening when yields are so low.
Yields are low on long-term, actually all government bonds in the US here, but actually in Europe, they're even lower than they are in the US. So for safety, you still get a little bit of yield. The 30-year US government bond is at 1.2% right now. It's not much, but it's better than you can get in a lot of places. Also, it's just a historic safe haven asset. When stocks sell off, people don't know what to buy. They go to government bonds. And so typically when stocks fall, government bonds rise.
Talk to me about what you're telling your subscribers and what you would suggest in terms of length of time to stay in them as a hedge.
Sure. Well, rather than going out to the US Treasury and buying individual bonds, there's a fund, ticker symbol TLT, that tracks long-term government bonds. I think that's a great option for most investors and traders. If you're looking for a short-term hedge, like if you think that stocks are going to drop sometime in the next month or so, you can just hold on for a short amount of time, maybe again until you see your drop, or you may choose to use a stop loss, like a 5 or 8% stop loss that prevents you from losing too much. If you're looking for a general hedge, just to reduce volatility in your portfolio, you can hold for a year, 2 or 3 even.
All right, and I wanted to ask you too about how much of the portfolio for people that are heavily invested in stocks would you recommend for government bonds then?
As a general rule, I'd say maybe you have a quarter to a third of what you have in stocks in hedges. Government bonds can make up a large percentage of that. And I think it's one of the better hedges. And I don't count precious metals in that category of hedges. I think that's a separate asset class that can work to reduce volatility. But yeah, that's about what I'd say for government bonds and related assets.
Great. Thanks so much for joining us there, Ben Morris with Daily Wealth Trader. We appreciate your time and insight on how to use government bonds as a hedge and why we're seeing a lot of people do just that. And if you'd like to see much more content just like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. Thanks for watching. That's all for now.